markets that we had looked at, typically the median length of stay has been fairly stable, and this one is too, but it's really interesting to see how during the summer, right, June, July, August, the average length of stay is 3, and the rest of the year's length of stay is 2. And so, definitely the extended weekends and things of that nature that folks are going to this region for.
Weekend warriors. And it's also interesting that a good even though the median length of stay is 2-3 nights, a good majority of the listings don't have any weekly discounts. So there might be some opportunity there, even if you're holding rate, to increase your rates and still allow for a weekly discount.
Welcome to RevLabs by PriceLabs.
Hi, everyone. Welcome to another episode of RevLabs by PriceLabs. Today, we're going to be doing a deep dive into some Canadian markets. It's another episode of Revenue Radar. I'm joined here by John. You're probably pretty familiar with John. I'm also joined by Emily. You're also probably pretty familiar with Emily. I'm going to let them do a little introduction. John, you want to take it away?
Yeah. Hey, my name is John Ahn. I'm the CEO and founder of Techtape. We provide revenue management services, done-for-you services for short-term rental operators all around the world.
All right. My name is Emily Pattillo. I'm a consultant at Revzen and partner, and we also provide revenue management services for people in the STR world all over the globe. Over 10 years. Actually, I'm going to age myself if I go any higher. So we'll keep it at over 10 years of experience, specifically in the short-term rental field and revenue management in this, in this space. So happy to be here. Thanks for having me.
Yeah, thank you both for joining. It's been a little bit of an episode in the making, so I'm glad we're finally getting this recorded. For those of you who don't know me, I'm Monique. I'm one of the senior solutions consultants at PriceLabs. I've been with the company for about 3 years now. Got my start in the short-term rental industry because my husband and I bought and still own and operate a vacation rental up in Vermont back in 2018. Kind of got my feet wet, and I haven't looked back since. I joined PriceLabs, like I said, about 3 years ago, and it's been a fun journey ever since. Like I said, today we're going to be diving into some markets in Canada. The markets that we're going to be focusing on are Muskoka in the Lakes region, Toronto, and Vancouver. 2 of those are obviously more city markets. The other is more of a rural and traditional vacation holiday market. I'll let John and Emily add their commentary, but first, before we dive into those markets in particular, I want to just take a look at Canada as a whole. So let me share my screen here. All right. So this is using PriceLabs short-term rental index. You can find this by going to hello.pricelabs.co and navigating to the resources tab. This is an overview of Canada as a whole. As you can see, there's pretty clearly a peak and off-peak season for Canada. Number of listings is interesting. It seems relatively stable over the last few years. When we're looking at this, the black line is this year. So you can see this year, last year, and the year before, relatively stable in terms of number of listings. Occupancy and RevPAR also are following pretty much the same curves as they have in years past. Not sure if either of you have anything interesting that you would want to note here about Canada as a whole before we start diving into the specific markets.
I think one of the things that we're going to be talking about today is probably number of active listings. And while you did say that it's been relatively stable, you do see kind of a downward trend across all of Canada. And I think that's something that we'll be probably discussing a little bit. Mm-hmm. And then it's actually interesting because if you look at the ADR graph, ADR in 2025 is actually noticeably higher than 2024. Mm-hmm. However, occupancy is very similar, and yet RevPAR is still similar. So I'm not sure how how that's all mathing out, but that's interesting that people are holding on to higher rates and still getting the occupancy. I think those are the quick things that I'm noticing. Emily, anything on your end?
I think from a high level, it's no secret that Canada is experiencing some regulatory pressure in certain markets. So when we dive into the particular markets, you'll see some disparity in the supply and how the market has responded to it. So we'll get into the granularity when we get into the specific markets, but I think that's noteworthy.
Yeah, I agree. All three markets that we're going to be looking at today, especially Vancouver and Toronto, have experienced some severe regulations that have gone into place over the last few years. Muskoka is a little bit more piecemeal because it's kind of going township by township. Some townships have, reasonable regulations in place where operators are still able to continue their operations, but some townships have enacted all but outright short-term rental bans. So we will definitely take a look at how that number of active listings differs based on each market. I also agree about the ADR. It's interesting that it's higher where occupancy has been stable. Yeah, we'll see if we can glean anything from the actual dashboards about this, like in particular. With that being said, we're going to jump into Muskoka first. Let me get this dashboard up. Okay, perfect. So first things first, you've got all your KPIs here. If we're looking at Muskoka on a map here, you can see it is kind of a broad region, lots of lakes, lots of outdoor activities, lots of more traditional vacation rental companies operating in this area. You've got some of the properties being, more Great Lake front. Some of them are a little more inland. Any market specific insights that either of you would want to share before we start diving into the nitty gritty?
I think it's just worth noting that this is a very seasonal market. You'll see some very drastic changes. I mean, obviously, when you have a leisure market on, like frontage, so it's definitely worth noting. And of the three markets, this one has been the one that has maintained the supply the most. So it kind of goes in correlation to what you just said, Monique, about the specific townships, but we get into some other ones, it won't be the case.
And I think, again, as you mentioned, because it's kind of a more traditional vacation rental, kind of a area, I think that stability and that like familiarity with having short-term rentals keeps it stable. The other thing I want to note is it seems like, June, July, August are the peak seasons. And then if you're looking at it, July this year seems to be stronger than July last year, in all fronts, right? So
Very much.
maybe it's because they're not coming to the US, or we're not sure, but those are some of the things that I have in the back of my mind as you're saying, like, what may be driving some of the increased demand and whatnot.
Yeah, it actually does look like for July of this year compared to July of last year, RevPAR, obviously the month is not complete yet, but RevPAR is up by about almost $30.
Yeah,
that's pretty significant.
Yep. But then even if you look at June, the RevPAR was up. So again, this year seems to have that stronger trend in this overall market.
But the beginning part of the year was a little rough, right? They got into a rough start, but the tide has turned and continues. So we go and look at future occupancy. It's doing quite well near term.
Yes, here's our future occupancy chart. Let's check out. Okay, here's occupancy for this year overlaid with now occupancy from last year. Weekdays, even weekdays and weekends seem to be pacing ahead outside of, what is that? Towards the end of August up until mid-August, it looks like weekdays are roughly the same as last year. Weekends are all pacing ahead. So it's interesting that we're seeing a little bit more weekday pickup here, or weekday occupancy for the future. Here's our pickup.
And then again, you can see what the end of the season is like end of August, and then there's a steep drop off. I mean, historically, it's but steep drop off. So then, what was I gonna say? Not I'm not the most familiar with Canadian geography, but clearly not a ski market of any sort, and that's why the winter seasons are so much weaker than the summer.
Yeah. The closest ski markets would be a few hours east, I believe. I don't know if there's any local ski markets. I'm sure that there are, but they're probably not like destination ski markets like you get in Quebec. So yeah, we do see obviously historically decent occupancy over the holidays. Strong weekend demand though, historically as well, even through fall season, which I believe can be attributed to foliage, as in a lot of northern, eastern markets. What's interesting to me is how sharp that drop off is right at the end of August, beginning of September, because in the US, we would attribute that to Labor Day. But in Canada, that's not a thing.
It could be a lot of domestic travel, and then kids are going back to school. And so naturally the season is ending.
Yep. Anything else that you want to add on the future occupancy chart? I do want to jump over to the supply and demand chart because I kind of breezed past that one.
Yeah, we can go to supply and demand, unless John, you have anything to add.
I mean, again, just looking at the future occupancy, hold your rates high if you're in this market. All the signals are there that you can push and probably, hold out a little longer than just trying to get the occupancy in. In past episodes, we haven't been saying a lot of that this year. And so, it's exciting to be able to say in this market, hold on to your rates. Don't give in too soon.
Yeah. And it's good to see, especially because I think people were concerned about how tariffs and like that whole landscape would impact travel. I guess it's not affecting travel to Canada so much.
Yeah. This is probably this is a drive to market, right? So
yeah.
It's probably internal, and I will postulate that some of the folks who may have been coming to the US and are now not happy with the US are saying what's a great place to go during the summer and deciding to go there.
I think that would probably be a fair assumption. Quickly looking at the active listings, John, you're right. In this market, we did see a decline starting around October of 2024, so a little less than a year ago. It's come down and it's been steady at 2.6K since.
It's down a little bit, but again, if you look just historically on average, like 2.6 is not that much lower than, what is it, like 2023 and whatnot, right? So it does seem like a pretty stable market. I did quickly look up the regulations here, and it seems like they did enact some regulations, but unlike the other markets that we're going to talk about, I think it doesn't necessarily have to be your primary residence that you rent out, and that's probably a part of part of the reason for the steady supply. The other thing I'll say is, again, supply being steady, that means travel, the travel demand is actually up. It's not because, supply is constrained, right? Sorry, Emily, I'm talking too much. I'll shut up.
Oh, no, you're fine. Fine. I agree with you. I mean, there was a slight dip in supply from last year. Like if you're comparing last year's active listings, as a whole, it is pretty steady, but there might have been some regulations put in place, last year that kind of brought it down a little bit, but it's not as significant as some of the other markets.
Yeah, when we dive into the next markets, we'll see what the difference is between that and here. Let me jump back up to the KPIs. I mean, overall, these KPIs, again, and this backs up like that forward-looking pacing and how the rest of the summer is pretty much pacing ahead. These KPIs are looking good. Any thoughts here? Anything that jumps out?
I mean, aside from mentioning that they, had a little bit of a rough start at the beginning of the year, they're really making a comeback for their season. So it's all good news. I have some other comments when we get a little bit lower, but generally this is a good path.
Mm-hmm.
And we saw the future, the future occupancy, right? So it seems like the rest of the year is going to end up pretty strong for this market. One more thing, not to just keep jumping around, but
Okay.
a lot of the other markets that we had looked at, typically the median length of stay has been fairly stable, and this one is too, but it's really interesting to see how during the summer, right, June, July, August, the average length of stay is 3, and the rest of the year's length of stay is 2. And so, definitely the extended weekends and things of that nature that folks are going to this region for.
Right. Weekend warriors. And it's also interesting that a good even though the median length of stay is 2-3 nights, a good majority of the listings don't have any weekly discounts. So there might be some opportunity there, even if you're holding rate, to increase your rates and still allow for a weekly discount.
Mm-hmm. Yeah. Looks like around 40% of listings offer no weekly discount whatsoever.
Right.
Great information. Anything else that you think we should add here on this market before we jump into, I think we're going to do Toronto next?
I mean, I would resonate the same thing with monthly discounts, but
Yeah.
these are a little bit harder, especially during your peak season.
Yeah. I would be curious to see if they do start to get any like midterm stays or extended stays that are, 2+ weeks in that off season. Remote workers, maybe, since it is a drive-to market, and I think probably primarily fed by the Toronto area. That's an assumption. Don't quote me on that, but it is logical and makes sense. I would be interested to see or hear from operators in the area if they incorporate that into their strategy. I'm thinking of 1 or 2 people off the top of my head that I personally have worked with that have tried to promote that. And it can be hit or miss, depending on, I guess, the traveler that you're appealing to.
Right. And then just looking at these two with the day of the week occupancy and the pricing, you can see that the occupancy midweek, which makes sense, is significantly lower than the weekends, drive-to market, all of that. But the day of the week pricing doesn't really mirror that quite as much. So there might be some opportunity to either increase your prices on the weekends or decrease your prices during the weekdays to try to, get more of that midweek business and capitalize on where the demand is.
Yeah. So this is reflective of the last 360 days. I'm just going to change the view to the next or to the last 30. Yeah, there's still a decent difference between weekday and weekend occupancy. But prices, again, don't move as much.
Yeah, definitely, Emily, you're exactly like opportunity to work those prices down and increase the occupancy to that, significantly increase your overall revenue by looking at these graphs that you're just showing.
Yeah, very cool. Good stuff. All right, let's move on to Toronto. Give it a second to load up here. Fun fact about Toronto, I will be there next week. We're going to be getting this episode out, I assume, ahead of that. On Wednesday, August 6th, PriceLabs is going to be doing a road show in Toronto. Maybe we can include the link to sign up for that in the show notes. But I will be there along with a few of our partners. And we are going to do a little bit of a deep dive into the Toronto market. Let's consider this maybe a little bit of a preview from that. So right off the bat, Toronto, kind of like an opposite market compared to Muskoka. Urban market. It's the biggest city in Canada. It is the capital of Ontario, I believe. My Canadian geography and knowledge is like a little weak. But yeah, it is also a market that's been heavily regulated. And a lot of people that I personally have worked with in Toronto have moved towards midterm rentals. These are not new regulations, though. They've been around for a few years now, if I'm not mistaken. Any context that you guys would like to add about Toronto?
I'm
Again,
not
quick.
going there this summer.
Me neither, but I wish I could be at the road show, but won't be there. No, like I kind of just at a high level, I think the more recent regulation is that you can only rent out your primary residence. And correct me if I'm wrong. This is kind of quick research, and so you have to get a license and whatnot. And so I think that's dampening down the ability to run a short-term rental operation, a business. And so if you look at the graph that you're looking at in terms of active listings, you see that in 2023 there was a huge drop in the number of listings, and that I think that was our first batch of regulations, and then over the past year the number of listings have gone down again. I think the more recent regulations, and I want to say like $100,000 fine for violation or something like that. So something, set to really discourage trying to sneak by.
Yeah, from what I understand, yes, the primary residence is one of the regulations. I believe there is a way for you to get permitted as a non-primary residence, but I believe it depends on the building specific. I don't know too much detail about that, but that's something that's come up as I've worked with customers in Toronto. And like I said, a lot of those customers are moving to a midterm rental strategy and trying to service those remote workers, travel nurses, people who are able to travel for extended periods of time versus capturing that short-term rental demand. And it's noticeable. I mean, just personally, I'm a little behind and haven't booked my accommodations for next week. And I was looking at both short-term rentals and hotels, of course. Hotel prices are through the roof. Short-term rentals remain more affordable, but the pickings are slim. Especially when you want to look for somebody that's operating professionally and has history. That way, you're getting a good night's sleep when you're on a business trip. Yeah, I probably should have looked at my accommodations a little sooner.
Well, that's interesting because in New York City, when they banned short-term rentals, somehow the hotel prices went up through the roof, right? So,
yeah,
no correlation there.
I mean, at some point, it becomes it's not just speculation, and it does become correlation.
Yeah, exactly. If we go to the top KPI.
Mm-hmm.
It's actually pretty interesting because the available listings that's saying year to date has actually gone up, right? Although the graph made it seem like it's been on a downward trend, and number of bookings have also gone up, but then the revenue, RevPAR, everything else has gone down, right? So, what do I want to say with this? It's all like I need to look at some of the other data points, but it's typically with the constrained supply, then that would help to bring up the revenue. But this saying the supply is increasing and the revenue is going down. Yeah, I don't know what I was trying to get there, so I'll let Emily speak.
I just want to clarify one thing, just so everyone knows. This total number of available listings here tracks the number of unique listings that were active for at least one day in the last 365 days. So it may actually not be that these many listings are active right now. I mean, I think that if we went down and looked, we were sitting around 16K.
Yep.
Yeah, just over 16K. But throughout the year or over the last 365 days, at some point, 18.1K number were the number of listings, or 18.6K were the number of listings that were active at one point or another.
Got it. Let's see what else. Looking at it's kind of a similar pattern to Muskoka, right? The beginning of the year was actually significantly down from last year. So in January, February last year, RevPAR was 59 for the overall market. This year, January, February was 50. But it looks like as the summer's coming, in terms of RevPAR, it's either caught up or slightly outpacing last year. So maybe that is the overall trend. Again, in Canada, if they're not coming to the US, they're either going somewhere else or staying home, right? And so maybe that's, and beginning of the year, we didn't have the trade wars and people weren't pissed at the US. It only started in February or March that there were cancellations and things from Canada.
Yeah. But look at how interesting this is. I've gone back here and I'm now pulling up older data from prior to that time period, like John said, and the pacing behind started before that trade war even became a thing. I mean, this is the holidays of last year.
Okay.
Right. It's this year it's been rough, it looks like, but it's made a pretty steady recovery and it's starting to normalize. Now, when you're looking at this graph, there's a couple things that stand out to me, like aside from overall trends, when you're looking at, I don't think those are holiday dates. Maybe it is holiday dates. You got a spike there that you don't have this year. So I don't know if that's an event or what that could be, but I would look into that because it is significant, even though it's far out.
Yep, it's 2 weekends in a row. I can quickly search.
Emily, you're talking about in like end of November, beginning of December?
Correct.
Like last year? Yep.
Yeah, I think that's before December, so it might be November, both weekends.
Yep, the 14th and the 22nd.
Right.
Or the 14th and the 21st. Anyone want to take a wild guess?
Answer.
Taylor Swift.
Okay.
Oh my goodness.
Yeah, that's crazy. And here's where those where that occupancy ended up for both of those weekends.
She was there for 2 weekends?
Yeah, looks like 2 weekends in a row.
Wow.
That's a meaningful impact on the local economy.
Yeah,
for sure.
Really.
Right. So this year you shouldn't be holding out for at the end of November.
Expect serious year-over-year declines for those weekends.
Definitely
for the month
not.
of November. Yep.
You got 2 weekends here that are pacing ahead though. So not sure if those are holidays or events, but maybe worth looking into. Friday, September 5th. Saturday, August 23rd. Anything else to add here?
I'm curious to see if Vancouver has that similar, slow start to the year and then kind of catching up and closing out the year on a stronger note.
Yeah, we'll get to Vancouver in just a second. I do want to look at something interesting here, and I might do this for Vancouver as well. I'm more familiar with operators in Toronto because I cover the East Coast at PriceLabs, but here, I'm curious to see how many listings in this dashboard are strictly midterm rental listings. So I'm just going to filter this really quick. So 3,100 listings are midterms out of a little over 1,500 listings that are being displayed on the dashboard right now.
Okay, so still a substantial supply of midterm, meaning less than 30 days, less than 28 days.
I applied the filter of any minimum stays of 28 days or more.
Okay, yep.
Which is 28 to 30 days is generally what we at PriceLabs consider midterm rentals. Usually that minimum is set within the requirements of the town, and that's what people will stick to. I believe I don't know if it's in Toronto, but I believe it's in Montreal. Some towns will do something where like they require that 28 night minimum, but if you have like a 28, 29, or 30 night stay, you're still subject to a higher tax rate. But then once you exceed a minimum stay of like 31 nights, I think it is in Montreal, you're no longer subject to that. So they kind of play a little trickery there in trying to still collect that higher tax rate from a short-term rental. All right. Any final thoughts on Toronto before we jump into Vancouver?
Yes, I had a couple more on the distribution side.
Yeah.
I know, well, first let's kind of chat about the differences between the first market that we looked at and the pricing with day of week. You see much more of an alignment here in this market with the day of week and the pricing that you have. So that's good. That's positive. And that's kind of more like what you'd be looking for with that type of occupancy, knowing that there's not as much of a disparity. But I would mention, you know, even though they do have pretty good midweek business, they still don't offer any sort of, or there's a significant amount of listings that don't offer any sort of weekly discount. So it is a little bit more stable. You don't need it quite as much as you might need it for another market that's more of a weekend warrior, but something to note. And then the other interesting point that I found in here is that it's such a quick win, but there's some of the amenities that are desired are super easy to include, like coffee, self-check-in, shower gel essentials. And like that's the one of the top desired amenities, or I guess the discrepancy between, you know, what's offered and what's desired. So those are just such quick wins. I mean, maybe not self-check-in, but the other ones for sure. Whereas the other market, you know, they gravitated to more higher end amenities. These people are just wanting some coffee.
Yeah.
Some coffee.
Come on, Emily, you don't want them hitting us anymore.
We often look at this chart in PriceLabs and let people know, especially when they're professional property managers, that this is a quick way to make yourself stand out, because professional property managers are often the ones that will take the time to go through all of these amenities and make sure that they are all checked off on all of their OTAs and on their direct booking websites. So this definitely goes to show how it can make a difference. Sounds like some people here might not be paying attention to those small details. And to a guest, especially a guest that might be traveling during the week for business travel, coffee's pretty important.
But to your point, Monique, it just may be that like they didn't check it off, right?
Yeah.
Like
Right.
their listing is just like they didn't check it off, but they actually have it, right? So,
Sure. Mhm.
which is like the worst.
Even more of a quick win.
Exactly.
Exactly. All right, let's jump over to our final market here, Vancouver. Give that map a second to load. So Vancouver is, again, more of a traditional urban market. Something that's interesting about Vancouver that I learned while doing a little bit of prep for this episode is that while it does have extreme seasonality, and I'm going to refresh this page because the map doesn't seem to be loading. While Vancouver does have extreme seasonality, peak in the summer, it also gets a peak in the winter because of Whistler adjacent demand. So it's a spillover market, it sounds like. And in the shoulder season, oftentimes people will book pre and post cruise stays. So that is something interesting that I learned as well. Anything that either of you would like to add about Vancouver before we take a look at the supply and demand?
Well, the theme that we've been talking about, it also looks like Vancouver had a rough start to the year. So all three markets. But July, man, it's crushing it this year over last year. That's ADR for July 2025 like is what like almost $60 above last year.
Mm-hmm.
Yeah. That's the first thing that I'm looking at, just kind of how the overall market is performing.
Mm-hmm.
Making a turnaround.
Yeah. Very interesting. Let's take a look at wow. Obviously not as many listings as there are in Toronto, but again,
Consistent
Pretty
decline.
sharp decline. Yeah, decline of active listings.
mm-hmm. And around that same time is when they initially started seeing that it's not as significant of a drop off, but it is interesting that it's around the same time as we initially saw when we were looking at Toronto.
Right.
Very interesting. Looks like for July of this year, we've actually now dipped below 5,000 listings that have been active. Where we
That's
haven't
active for a year or
active during the month of July.
okay, got it.
Let's take a look at that price and occupancy. Let me pull up. Go back a little bit here. So we can at least see the holidays. Very, very similar. Although, what happened here?
Taylor Swift?
I'm curious. I am curious.
There's also 2 spikes. Maybe she spent 2 weekends there too.
Let's see. So that was Saturday, November 15th.
That sounds
and
yeah.
Friday, December 5th, Saturday, December 6th. While I look this up, anything else that you're seeing that's interesting on this chart?
This Vancouver seems to overall be pacing behind last year consistently. Pretty much throughout the let's look at that. Pretty much throughout the year, just slightly behind, right? So but I think the declining supply, the decreased supply is helping to keep that. What I found interesting before was the RevPAR was up substantially. The ADR was up, I forget how much the ADR was up. I'm just talking to, kind of share what I'm thinking. You can stay here. But then the occupancy had actually dropped by about 10 points for the summer months between last year and this year. So that opportunity to fill that occupancy could further drive revenue. All right,
Yeah.
Monique, what's the answer? Was it Taylor Swift?
It's Taylor Swift, at least for yeah, for both. Last year it was Friday, December 6th, Saturday, December 7th. Both of them were at the BC Place. The first of 3 shows at BC Place. Wonder when that 4th show was. And then let me see. November 16th, which is that smaller peak here. The Grey Cup Championship game. Grey Cup Festival. Not really sure what the Grey Cup Festival is. Also an NHL game, but that probably wouldn't have that much of an impact. It looks like, though, there was an increase in tourism, according to my ChatGPT insights. There was a citywide spike because of the Grey Cup Festival last year in November. Taylor Swift had a bigger impact, but still interesting. But yeah, we're just not seeing that again. I don't know. Is the Grey Cup happening again this year? There's probably people from Vancouver listening to me. Like, how could she not know what the Grey Cup is?
Clearly, it's not the Stanley one, right? Stanley
It
Cup.
is not. The Grey Cup is happening this year, but it is not in Vancouver. So, again, another example of don't hold those rates up.
Yep, not for that weekend, not in Vancouver.
Yep. Okay, anything else that we should look at in this dashboard before wrapping up?
You've got a little, actually, this seems to be consistent. Yeah, I was going to point out September, but it looks like you've got a little demand spike the second week of September that's not as consistent with the rest of the underpacing to the market. So it could be an event flip-flop from one weekend to the next, or it could just be a new event that's happening.
Yeah, let's look that up.
But there might be some pricing opportunity there.
That was September 12th and 13th. I don't know how much of an impact any of these events would have. Looks like there's some live music happening.
Well, look at last year, right? There's that weekend before that had that little spike, right?
Yep.
Is that the same event, just shifting one week? Or similar event? That's what it kind of looks like or feels like, looking at the data, the graph. I think overall for this market, for Vancouver, while you're searching, Monique, unlike Toronto, it seems like people are killing it in the summer, holding high ADR, but to kind of move towards success for the rest of the year is actually kind of letting go of the ADR slightly and actually focusing on the driving up occupancy. Is probably, I think there's ample opportunity from what's happened earlier in this year and what we're seeing in the summertime, right? Lower occupancy but higher ADR. I don't think that would be the game to play for the rest of the year. Looking at this graph in front of us right now.
Yeah, I would agree. Emily, what do you think?
No, I agree. I agree with that. And then I'm just looking at day of week occupancy versus pricing, and this seems much more normal than the other two markets. So seems like they're doing a good job there. matching the discrepancy with the pricing.
Mhm.
And then
Weekly discounts.
You're
You're seeing the same thing that we saw. Yeah. Yeah. So here's your weekly discounts. So Emily's on top of that. Great advice from her to optimize that for the future. And then, yeah, self check-in and coffee and essentials.
Yeah. Which
Maybe I should go into the short-term rental business and just do self check-in and coffee.
portable fans.
A la carte services, John.
One.
All right, great. This has been really insightful. I'm glad we chose these markets to take a look at. It's always interesting comparing and contrasting urban markets to more traditional vacation markets, even when they're near to each other. So listeners, definitely a lot to take away from this episode. Any final parting thoughts, Emily, John?
I mean, I think that we just all have to get in there and look at the data as much as possible. I know we harp on saying the same things over and over again, but as you can see, talking to your friend that might have another listing in, a nearby city, they're not going to behave similarly. They might be directionally similar, but there's a lot of changes per market. So we got to stay on top of it.
Yeah, I agree.
Yeah, it's not. It just doesn't happen. It's not set and forget it, right? Even during this conversation, we identified certain things that kind of popped out of nowhere, and we had to look at it closely to see what was going on. So definitely, but looking in markets, especially markets that I'm not familiar with, is actually a lot of fun because that removes me one step from kind of the biases that I have internally,
Right.
and just kind of talk about what I'm seeing in the graphs and the data.
Yeah, I agree. Well, thank you both for joining us. I'm glad we were able to make this happen. Thanks to all our listeners for tuning in, and we will see you again soon for the next episode of RevLabs.
Thanks, Monique.
Thanks, guys.
Thank you.